Welcome, investors, to the Absolute Return Podcast, your source for stock market analysis, global macro musings, and hedge fund investment strategies. Your hosts, Julian Klimachko and Michael Kesslering, aim to bring you the knowledge and analysis you need to become a more intelligent and wealthier investor. This episode is brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com.
Welcome, ladies and gents, to the Absolute Return Podcast. I'm your host, Julian Klimachko. I'm joined by my co-host, Mike Kesslering. And on today's show, we welcome special guest, Allego CEO Mathieu Bonnet. Allego owns a pan-European electric vehicle charging network. On the podcast, Mathieu discusses the European EV market and its 46% expected growth rate, the future of ultra-fast EV charging, how Allego expects to generate 30% IRRs from its owned sites, what it was like working with private equity firm Apollo on Allego's going public transaction, and more. So with no further ado, here's our podcast with Allego CEO Mathieu Bonnet. We have Mathieu from Allego on the podcast today, calling in from the Netherlands. Mathieu, how are you doing today?
Yeah, I'm doing fine. Thanks a lot. Thank you for hosting me.
So today we are getting into the details on the European EV market, specifically from a charging perspective. What really surprised me about the Allego story and what you guys are building is that the European EV market is nearly twice the size of the United States EV market. Not only that, but it's expected to grow at a 46% CAGR. Would you mind talking to us just about kind of the macro thesis behind the company and the market behind EV charging in Europe?
Yeah, sure. Yeah, let's begin with market, because I think that's quite amazing what's going on here in Europe. We are in the middle, and well, maybe just the beginning of a really big revolution from a shift to fuel cars to EVs. And just to give you a flavor of that, in Q4 2021. The EV penetration in terms of sales represents more, and full battery, not plug-in vehicles, but full battery represent more than 17% of all the fuel, the sales cars in passenger cars in Europe. So you can imagine that it is getting very, very important, and there are many reasons for that. Regulations, and which is very, very strong in Europe, to shift to EVs. And it will be, in few years from now, forbidden to sell any fuel cars in Europe. So that's the reason why at the end of the day, all the cars will be electric.
Yeah, seems to be that's where clearly the market is heading. Now let's talk about Allego's current charging network. It's massive. I believe it's coming up to 30,000 locations soon. Can you talk to us about Allego's network and also how it compares to competitors?
Yeah, sure. So we began in 2013, and we already with this idea to equip a new infrastructure, which is the EV chargers. So we are focusing on public chargers, and we began with slow chargers, what you have in the US, North America, what we call level 2, and very quickly we moved to the fast and ultra fast chargers for public charging station, because we do believe that when you want to charge on a public station, you want to charge quickly. So that's the reason why you want to do it in few minutes. Our network is in the Netherlands and in 14 countries in Europe, in the biggest market, Germany, France, UK, all over Europe. And we are the largest in terms of footprint network in Europe, actually. So we are ahead of the competition in terms of numbers of charging stations all over Europe.
Can you talk to us about the technology? Because clearly ultra-fast charging is a focus of the company going forward. Started out in 2013, slow charging. Obviously, no one wants to sit around for an hour waiting for their car to charge up. So can you talk about how important this focus on fast charging is?
Yes. So, and to make it clear to everyone, ourselves, we do not manufacture hardware. We focused primarily, and that's our tech, because we are a tech-focused company. We focus on the software layer to manage all the chargers. And what is important for it, because we considered that it will be a commoditized market, the hardware per se, the plug, I would say, even though the technology is improving. So we need to monitor many different kind of chargers in real time with the energy, take care of the authorization for you to be recognized, for you to process the energy, and for you to process the billing. Because we do all the chain, and we can do it everywhere in Europe, of course, on our networks. And we are already managing more than 6 million charging stations, for instance, last year in 2021, and it is growing really rapidly and dramatically.
So just to make sure I fully understand the business model, you acquire hardware from the manufacturers and you deploy them. You own this fast charging network. But in addition to that, you do provide third-party services. Is that correct?
Yes. So we have two revenue streams. One of our revenue stream consists in selecting sites, and there we have a very powerful advanced tool to forecast traffic and to find out the best layout of the charging station, how many charging stations we will install at the beginning, and maybe moving ahead with the increase of the traffic. We install the chargers and we manage and operate them on a long term, which is 15 or 20 years. And we directly sell to the EV drivers charging station. That's one of our revenue stream. And we have as well another revenue stream, which consists in selling charging solution, comprehensive solution to corporation. For instance, we have won a big deal with Nissan to roll out for them 600 for their 600 dealership fast charging station inside their or along their dealership for their customers in order to charge their cars. So we provide all the services from the chargers installation, and we onboard on our platform all these chargers during a 5 years period, so that they can track all the traffic, they can track the data, they can track what consumption they use, and to understand the pattern of charging.
And now, a word from our sponsor, Accelerate, one of Canada's most innovative and fastest growing alternative investment solution providers, with a suite of institutional caliber alternative ETFs for investors seeking diversification and long-term performance. The Accelerate Arbitrage Fund, symbol ARB on the TSX, is the world's first SPAC-focused ETF with a diversified portfolio of SPAC and merger arbitrage opportunities in an easy-to-use, low-cost ETF. The Accelerate Arbitrage Fund ETF trades under the symbol ARB on the Toronto Stock Exchange. Find out more at accelerateshares.com. So going through Allego's investor presentation, one thing that caught my eye is the part on unit economics, specifically discussing 30% IRRs generated from owned sites. This is obviously extremely attractive for investors. Can you give us some details backing that number of the 30% IRR?
Yes. So what we do, so we select the sites, and we need to select the best sites. So that's the reason why I've just mentioned the tool we use to do that. We design, and that's our proprietary, we design the layout of the chargers with the transfer, for instance, with all the connection with the grid operators to be supplied of electricity. And here we have as well an energy platform in order to make sure that we have the right electricity. I could come back on that, which is 100% renewable, because that's quite important to have zero emission mobility. And then we operate these chargers. We have a CapEx, investment at the beginning. But as a matter of fact, because we have our technology to manage our chargers, the OPEX are quite low and are mainly linked with the price of energy. But the fixed cost is going to be reduced with the higher utilization rates on our chargers. For instance, when I talk about fixed cost, that's the maintenance cost. And so what is very important for our model, it is a KPI called utilization rate. That's the number of cars per day, for instance, that use specific charger. And with the growing number of cars, we have this number growing and growing. And now, with all our projection, the figures you have mentioned, we consider that with 8 sessions on average per day and per charger, we will reach this IRR. So you may say, oh, but if it's so interesting, everyone will try to put some chargers. I guess so, but it is quite complex. Why that? Because you need to have and to find the best sites. And here you need to have the tools. And we have a tremendous backlog of more than 800 sites ready to be rolled out. That's one. And second, you need to secure grid connection. And here, that's very difficult. So it is a land-grabbing game, I would say, in a way, with the right techno in order to operate during a long term without any issue. So with a high uptime, your charger. And that's where our technology of what we call the EV Cloud platform to manage all our chargers is very important, because without this technology, it's very difficult to make it work smoothly and to make it work economically.
Certainly, it does sound quite difficult, no doubt. One potential issue with EV charging, and you noted this, is that the importance of renewable energy. For example, if the EV infrastructure is powered by coal-powered energy, then it kind of defeats the purpose. But you indicated this focus on renewable energy powering your charging stations. Would you mind discussing that?
Absolutely. That's quite important, because if we use a coal plant, for instance, globally speaking, in the term of cycle, to generate the electricity, you will emit more than the new standard, for instance, in Europe for fuel cars. So not a big deal if you want to have a zero emission mobility. So it is important to have 100% renewable to do that. And to be able to do that, we make sure that our electricity comes from this kind of renewable. So we can be directly plugged with this kind of assets for them to feed the electricity on our charger, because we have the techno and the balancing, what we call, sorry, it's a bit technical, but balancing perimeter in the different countries in Europe to do that. And we are active on different power markets in Europe, which is a liberalized market. And so, yes, we have all the techno to be sure that we can track the right electricity on our charger. And it is very important for our customers.
No doubt, because the environmental benefits are certainly one of the main drivers of EV adoption. Now, one potential concern about investors is we're discussing this 30% IRR, but are those attractive returns in any way dependent on subsidies or incentives, or any risk of those going away, if so?
So just coming back to what you just said about the importance of zero emission for the adoption of EV, that's true, that's one, and that's a big push. But there is another one, that's the cost. And here, I do think that there is maybe differences between what we see in North America and in the US or Canada and with Europe. We have, of course, a benchmark, which is the fuel price. And the fuel price is so high in Europe, just to give you a flavor, more than $8.5 per gallon, that the charge on our ultra-fast charging station, even though you pay a premium to charge very quickly, is much lower than fueling your tank. So it is an economic reason as well. It's much more efficient to drive an EV right now than a fuel car in terms of cost, and the total cost of ownership is much less for EV than with fuel cars. So that's a very, very important driver right now with this push to EVs. That's the reason why I would like to stress it for your listeners, because that's very different from the US. So that's the reason why it will be massive, this adoption, and there will be no way back.
And now a word from our sponsor, Accelerate. Do you want to diversify your investment portfolio while benefiting the planet? The Accelerate Carbon Negative Bitcoin ETF, symbol ABTC on the Toronto Stock Exchange, provides investors with exposure to Bitcoin while protecting the environment. Accelerate implements a global tree planting campaign to sequester carbon emissions and help fight climate change. Up to 10% of ABTC's 69 basis point management fee will be allocated to Accelerate's annual tree planting campaign. For each $1,000 invested in ABTC, an estimated 1 net ton of carbon dioxide is expected to be sequestered each year. Buy Bitcoin, save the planet. Find out more at investabtc.com.
You discussed some of the economics, the unit economics from your perspective. Can you talk about the economics from the perspective of real estate owners for your sites, and why you're having one of your sites would be more attractive than some of the other uses for the real estate.
Yeah. So, and maybe it can be linked with a part of the question I haven't answered to Julian regarding the subsidies. We can make it thrive on our with good economics with our charging station without any subsidies because of the economics I've just mentioned in Europe and the dynamics of this economics. Anyway, there are some subsidies, but more global one, which is more credit carbon, because if you have some avoidance of emission of CO2, you can trade. It's the equivalent of trading your CO2 emission on the market, and in Europe we have a market for that. So it is a market mechanism, I would say, that can be used as well. And regarding the economics for the sites owner, basically speaking, what we bring to them, that's a new service. For instance, when we partner with a retailer, for instance, we bring a new service for their customers, being able to charge. So that's the reason why we have a kind of return, which is basic now, because they understand that they have something valuable as well in terms of spot, and the order of magnitude is around 1 or 2% of the revenue. So it's quite reasonable, because in addition to that, which is, I would say, hard money, we bring these new services that is needed for this retailer, because if they don't have that, well, people with EV would prefer to go on a retailer with an EV, the charging station on their parking lot, instead of going to another one without. So that's a very good push. And we bring for us the CapEx. So that's quite interesting in terms economically as well for them. So it's a win-win situation.
When you mention the carbon credits, are those going to the real estate owners or to you?
No. They are going to us because we are the investors and we are the owners of the station.
Interesting.
That's really good to know. Thank you for clarifying that. Now, you recently announced a going public transaction, the merger with SPAC Spartan Acquisition 3. And what I should note is that SPAC specifically is backed by Apollo Global Management, massive global private equity firm. What was it like working with Apollo?
Well, so you have understood that for our plan, we need to install and roll out charging stations. So we need to fund our CapEx. So that's the reason why we wanted to raise capital. And a way to do that, we consider a different route to do that and different ways. And the SPAC was considered a good one. So that's the reason why we see this universe. And we were very, very happy and proud to be to have chosen Apollo with this where their franchise Spartan Spike, where they are very knowledgeable as a matter of fact, of course in private equity, but I mean infrastructure, so they know energy, and that was quite important for us that we could partner with some people who know that, and with very learned, I would say, professionals that can understand our business quickly. So that's the reason why we partnered, given all of these, and as well with the size of the SPAC, which is a $500 million SPAC. It was quite interesting for us in order to fund our plan.
That's great to hear. As you look forward into the future, do you have any plans to expand beyond Europe or into Asia or North America? And if not, what are some of the bottlenecks to doing so?
So right now, to be honest, Michael, we're going to focus mostly in Europe, given the size of the market and the dynamics of the market. Our plan is based on Europe, but we will consider along our journey, that's for sure, other market as well, but not in the short term. We definitely want to grow where we are and to make the most of the position we have already built. One of your
EV charging peers recently went public by a SPAC. So when investors are looking at the sector, some are going to want to pick one stock. Why should that be Allego? What separates you? What differentiates you compared to your competitors?
So first, given the others, I think we are in the biggest market which is Europe, and that's a big advantage. So if you want to have a flavor of what's going on in the leading market, it is happening now in Europe. It's 3 times bigger than in the US. That's one. Second, we are nearly a 100 million euro revenue company already, and we are operational positive EBITDA. So I mean that's we are talking about real figures, real business, and growing business. So we are not in a startup mode. We are much more advanced than that, and we are now in an execution mode of rolling out our stations.
From the investor presentation, it seems like there is a big focus on positive EBITDA, which is great to see in the current market environment where investors don't necessarily have a lot of stomach for riskier, unprofitable companies. So you're definitely heading in the right direction, a massive market ahead of you. The going public transaction expected to close early March. Once it's up and trading as ALLG will be the new ticker symbol. So Mathieu, thanks for coming on the podcast today. Going to be watching the story closely and wish you the best of luck.
Thank you very much for hosting me again. Thank you, guys.
All right. Thanks so much. Bye, everybody.
Thanks for tuning in to the Absolute Return Podcast. This episode was brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com. The views expressed in this podcast are the personal views of the participants and do not reflect the views of Accelerate. No aspect of this podcast constitutes investment, legal, or tax advice. Opinions expressed in this podcast should not be viewed as a recommendation or solicitation of an offer to buy or sell any securities or investment strategies. The information and opinions in this podcast are based on current market conditions and may fluctuate and change in the future. No representation or warranty, expressed or implied, is made on behalf of Accelerate as to the accuracy or completeness of the information contained in this podcast. Accelerate does not accept any liability for any direct, indirect, or consequential loss or damage suffered by any person as a result of relying on all or any part of this podcast, and any liability is expressly disclaimed.